Hello and welcome to the Money and Velli podcast. I'm your co-host Velli, and today I'm going to be going over the general knowledge of the trading markets. So let's get into it. Now, before we actually get into it, we kind of have to give a little apology out, well, more than a little, because of course yesterday we weren't able to drop an episode. One reason was because Money, unfortunately, is a little under the weather, so we weren't able to record. And then another reason, I had some personal problems I had to handle yesterday. So those were the reasons we weren't able to drop. Even though he's under the weather, I know he can't record or do anything. I should have been able to step up with the stock and price action going on. But for right now, again, I have SPY pulled up. This is the ETF Trust, the S&P 500. Now, for this segment of the video, I'm going to be going over all-time highs, and those are one of the vocabulary or terminology that we discussed in a previous episode. So instead of just telling you, I want to exactly show you all exactly what I mean by all-time high. So let's take SPY for example. This is the chart for SPY. This is back to I think 98. So I'm going way, way back with this. But this is just to show you better examples of there's always going to be all-time highs with any stock or even crypto. Crypto has all-time highs. This goes for any markets, whether it's forex, the crypto market, the stock market, futures. There's going to be an all-time high somewhere. But for this example, I'm taking it back to 98, and this is I think around July. Now you can kind of see within the chart, SPY is kind of on a nice little rally up here. It's going up, it's going up. What we mean by all-time high, the highest price it has ever reached for this time. Now, this is back around July of 98. See right here, you can see it on the chart. This is around July of 98 right here. The highest price it reached, we'll round it off, we'll say 119. That's the highest price it has ever reached during that time. Around that time back in 98, in July of 98, this was the highest the price of SPY has ever reached. Now, if you remember a little bit in past episodes, we always tell you never buy or purchase a stock around the all-time high. You just don't find a stock and say, "Oh, I'm gonna buy this." Do at least a little bit of research because you don't know the circumstances surrounding it. And one of the circumstances is buying at the all-time high, which is never a good idea. And I know you might be thinking, well, it's the all-time high. The price is at the best. The stock is at the best price. Why not buy? Why would you buy someone's when they're asking for the highest price? It'll be best to buy it around the lower price, or you get it for a better bargain. Same instance, here, don't buy it at the highest price. Try to find a bargain for it. Find it or purchase it when it's at a lower price. Another reason not to buy it at the all-time high, which is usually the main reason. A lot of times when a stock or crypto, whichever market, it reaches an all-time high, the highest the price has ever been, it has a nasty little habit of it will crash, or at least the price will drop. Because one, the stock, the share, crypto, whatever, it has to breathe. What I mean by that is reached all-time high, it's done all it could. It has to breathe, it has to come down a little bit. Sometimes it still might go up. That's happened before, but majority of the time, the price of that particular stock or crypto, whatever it is, always drops. The severity of the drop is unknown, but it's always going to drop. It has to come back down a little bit to settle itself, to get itself straight. Another way you can call it like retracing a little bit, but either way, it has to come back down. So again, I pulled up the example of SPY in 98. Right now, I know I got my cursor right here, so it's blocking it. If you look at the top of the screen towards the top right, where it's at the 118 mark, that was the highest price for SPY. It was the highest price for SPY at that time. It was worth around 100, round off $119. Again, I said it. when it reaches the all-time high, it has a habit of dropping down in price. So here's the drop. As I scoot over, it crashed a little bit. Remember, it was at 119. I think the lowest was, we'll say 90. I'll judge it off this candle actually. We'll say $93. It dropped from all the way from 119 to $93. That's a nasty little drop. If you were day trading around that time, or even if you had some stocks or some shares, you had some shares of SPY at that time. If you had bought at the all time high or even around this area, and when it crashed like this, your portfolio would have been looking crazy if it was only solely based on having this particular stock, but you would have felt a hit to your account. Now, no, prices drop all the time, but regardless, your accounts do feel those hits. It feels those drops. So this is why we don't buy at the all-time high. It has a habit of dropping. I'll give you another example. We'll jump a whole entire year. There were other small little all-time highs, but we're not gonna really worry about that. We're gonna go to right here. This is July of '99. The all-time high was around 142, I want to say. Yeah, 142. Again, this is the highest the price has ever reached. And look what happened. It dropped again from 142 all the way down like to 127. It was a whole $20 drop. Doesn't seem that bad, but when you're trading it, you feel that difference. And let's jump in the future. We're gonna go in the future a little bit. September of 2018. Here's a perfect example. I'll zoom out a little bit. Now, there's another example too. I didn't even catch it. Was right here back in January of 2018. The all-time high was 286, and then it dropped all the way to 257. Again, another reason not to buy at the all-time high. It has a habit of dropping from the all-time high again. And this is in October of 2018, 292. It dropped all the way down to 260. Actually, it dropped even lower. Good grief. So let me do this so everybody can see. It dropped from all the way from 293 to 234. An entire 60 points. Remember, when we went over points is just easy for us to show representation for the dollar. So instead of saying it dropped $60, we'll say it dropped 60 points. It's just quicker and easier for us. So yeah, it dropped from 292 to like 234, almost entire 60 points. You definitely would have felt that. We do not buy at the all-time high. Does it have a habit of sometimes creeping up and going above beyond? Sure, but normally it always drops. Instead of going by exceptions, I would go by what's normal, what's the general thing that happens. Generally, it drops. We don't buy at the all-time high. Never buy at the all-time high. Why would you buy at a higher price when you can get it for a lower price? Makes more sense to me. But if you never look at the chart or you never pay attention to anything, you just find a random stock or a company. Oh, I'm going to buy this, and say again, it's trading right here for $292. Oh, I guess I'll buy this. It's not too bad. And you not realizing the grand scope of everything. It's at the all-time high. This is the highest it's ever been. It has a habit of dropping. So those are some examples of a stock being at the all-time high and dropping, having a severe drop below that price. So, and like I said, we're going over general knowledge of the trading markets. The markets have an all-time high. So I'm going to be going next. I'm going to be going over exactly what is a bull and what is a bear market. And what do you know? We have a nice little example right here. As I adjust the chart a little bit, it's going to be looking real ugly. Hold on. I want to make it perfect so everybody can see. This right here would be a good example of a bull market. And I forgot to mention, I have SPY pulled up on the 1 day chart. So each candle represents 1 day of price movement or price action. And what you're seeing right here is between December of 2018 all the way to around February. No, we'll say, yeah, February of 2020. Think of this as pre COVID. This was pre COVID for SPY. So right here would be an example of a bull market. The stock is just going kind of ignore this for a little bit. It surpassed this. So it went here, it dropped, but then it's just climbing and climbing. It dropped just a little bit. It happens. There's always going to be some little drop. A stock, crypto, you'll see it every now and then, but for an extended period of time, you'll never see a stock just go straight up or a crypto go straight up. Not for an extended period of time over months like this. You'll never see it go instantly straight up. It'll never happen. Not for this long of a period. Maybe a few minutes of trading or within the same day, possibly, but not over this long period of time. But let's get back to the main point. This would be a bull market because everything's just going up. I don't know how I want to adjust it. So the stock is just going up. You keep following, it's going up, it's going up, it's going up. This will be a perfect example of a bull market because during this pre-COVID, from December 2018 all the way to February 2020, we was in a pretty good bull market. This is like standard bull market. It's just going up. It reached a high, had to come back down a little bit to breathe. It goes up, had to come back down and breathe. This wasn't like the all-time high. Keep that in mind. This wasn't the all-time high. Now, this right here was an all-time high. It's funny, we're talking about bull markets. This was an all-time high right here. The 338 line, or where this 338 candle was. That was the all-time high for SPY. This was the highest it has ever been. And what do you know? It dropped. And ironically, it dropped around the time. This is February 2020. The I kind of want to say the news of COVID was circulating around this one, not exactly this month, but things start getting in motion to be shut down. Or was it March? I can't particularly remember, but we all know around this time when things started going into a little bit of a chaos during COVID time. So ironically, this was the all-time high, and then COVID happened. And then in the previous episode, I talked about influences or things happening around the world that affect the markets. COVID affect the market, news affect the market. The news of COVID shook the markets. So it plummeted. It went from 339 all the way down to 219. That's more than 100 point drop. That's a massive drop. All the way from 338 to 218. That's about a 120 point drop. That's a massive drop. This goes back to influences around the world, how news affect the world. Not world, but news affect the markets. Things going around the world affect the market. Celebrities, political figures, important people affect the market. COVID was a world changing event. It affected the markets. And this is what I mean by market context, where you was at the all time high. I know we're in a bull market, but we're at the all time high. So I would have been expecting a drop anyway, because we're at the all time high. Then the news of COVID hit. which is basically was a pandemic. I know the news of an actual pandemic that definitely would have affected the markets. Now they both didn't happen at the same time. It wasn't it finally reached the all time high and then like 5 minutes later we got the news of COVID. No, it was already in the area of all time high, probably for like I don't know, a week or two. It was in this general area. It had already reached new heights. Because again, this was an all time high. This was an all time high. Because remember the example I gave you, it can still creep up. This was just creeping up, and we was in a nice bull market. The economy was doing well. We had no problems really to speak of. And I think really, if COVID hadn't really happened, we probably would have creeped up a little bit more and maybe came back down. But that's just my personal opinion. But because it was at the all time high, we have things affecting the market, things in the outside world affecting the market, which COVID happened. It was a pandemic. All those, all these things surrounding it. It had no choice but to crash. And again, it crashed all the way from 339 to I think what did we say 218? Yeah, 218. A massive drop. So that's another example of influences. COVID happened, the market shook. Now, again, ironically enough, from I want to say, yeah, from like February to the end of March, it was a pretty terrible drop. But that whole entire COVID year, SPY was doing pretty well, as you can see. And I'll zoom out a little bit just to show even better. And ignore these two blue lines. That's for the next example. But yeah, SPY was doing pretty well from March all the way to about December of 2021. So from March 2020 to December 2021, we was in a bull market. Even though COVID did happen, it only affected SPY and a few other markets only so much. So throughout during this time, the markets were doing pretty good. Really nothing to complain about. But now let's fast forward to recent times this year. This is what you would call a bull market. Now, I showed you what a bear market was. I think I showed you what a bull market is too. If I forgot to mention it, that time, the beginning of COVID around February, March, when I showed the example of SPY, that would be considered a bit of a bull market because it dropped. This would be considered a bull market. But to show a recent example, this is a bull market right here. Again, ignore this. I'll go over a little bit what exactly this is, but I plan to dedicate just what's funny, this little box a whole entire episode because it's a lot of explaining to do with this little box. But for right now, this right here will be considered a bear market. So this is kind of exactly what a bear market is, and I kind of show you example what a bull market is. And am I forgetting anything else? Oh yeah, I'm going to talk about supply resistance, which these are what these blue lines indicate. I have a separate example for them. So we'll go over support and resistance. How about that? And I think I have a better chart to show that on. So we'll get out of SPY for right now and we'll actually go to Meta. Now, Meta was previously Facebook, but changed the name to Meta. Oh, and how can I forget? Another thing I want to go over is something called ticker symbols. Ticker symbols is just the abbreviated or short version of the stock or crypto that you're looking to purchase or trade. That's all the ticker symbol is. Like Meta, or better yet, Apple. The Apple ticker symbol would be AAPL. That's the ticker symbol for Apple. It's just the shortened version of Apple. If you want like the New York Stock Exchange, the ticker symbol for the New York Stock Exchange is NYSE. NYSE. That's the ticker symbol. So when you see NYSE, they're showing the New York Stock Exchange. When you see AAPL, that's the ticker symbol for Apple. When you see SPY is the ticker symbol for the S&P 500 Trust. That's all a ticker symbol is. I forgot to mention that. So whenever you see just like 4 or 3 letters somewhere in a corner, that's just a ticker symbol of what stock or crypto that we're looking at. Bitcoin will be, I think it's BTC. It's Bitcoin's BTC. That's the ticker symbol for Bitcoin. Doge. Good grief. Is it Doge? I can't remember what Dogecoin is. Is it DOGC? Oh, it is dog. Oh well. But you get what I'm saying. That's the ticker symbol for Doge. And like I said, BTC is a ticker symbol for Bitcoin. That's all ticker symbol is. Oh no, drop my vape. Need the vape pen. But anyway, let's get back into it. So let me zoom in real quick. These are support and resistance line. I know both lines are blue and look the same. But here's the reason for support lines. Now, in a previous episode, we had discussed about this. When you're trading a crypto or stock, whatever, when you're looking at the chart and you see the candle or the lines moving, 'cause remember, these are candlesticks. You can have a line too. I prefer candlesticks. You'll see in certain areas that when the candlestick moves down, it'll stop right here. Again, yeah, that's fine. That happens during price action. But then it'll stop again in that same area. And sometimes it'll happen a third time. If it's when the price is coming down and it bounces and goes up, this indicates a support line. If it touches this area, I think twice, that indicates a support line. When the price is going up, if I can find a better example, sometimes you gotta move the stuff around. This right here is a good area to look at. If the price is going up, now again, support and resistance lines, they're not permanent things. They can be broken through. What I mean broken through is like, uh, where's a better example? You know what? I'll go over what resistance is, and then I'll go back over how they can be broken. The top one is your resistance line. It's the same example for support, except it's the opposite. When price is moving up, and see how it stopped right here and came back down. And then it stopped right here in the same exact area and went back down. This will be your resistance. Think of resistance as a ceiling. You want the price to break through the ceiling, and support is your floor. You don't want anything to break through your floor. That's what support and resistance are. They're like key areas to look out for. So, like if I'm trading something, an example would be the all-time high. This is not the all-time high, but let's just say the 200 mark was the all-time high, and say it dropped down in price. By that being the all-time high, usually I will automatically make that my support, not support, my resistance line because it couldn't break that $200 area because it was the all-time high. That's to be expected sometimes. But I would make that my resistance line because it was all-time high and it couldn't break that 200 mark ceiling. So I would make that my resistance line. And when it came back down, a lot of times a stock or crypto will come back and test that line again. And say, just for sake of the argument, the 200 area was the resistance line. It came back to test the 200 area again and it fell. It couldn't break through the ceiling, it fell. Now, back to how support and resistance line can be broken through. Now, this same little segment, technically, when it almost touched the ceiling and fell down, it touched this floor, right? But it supported it. It touched the floor again, but the support line couldn't support it. So it broke through. When it breaks through either a support or resistance line, it is no longer valid. But in the same sense, as price movement happens, as you see the chart and lines go up and down, new support lines and new resistance lines will be created. And at the same time, they will be destroyed too. There's always new ones coming and going. So that's a little bit about support and resistance. So sometimes you might hear people talking about a key area that's usually either a support line or a resistance line. Those are usually key areas to look out for. Because again, like this example, for the sake of the argument, let's just say the 200 area, you can see it's trying to break through this 200 area, but it can't. So that's a key area. If I was trading today, I was trading Meta today, and I saw that again the 200 area was a key area. I won't say placing my bets, but say I'm trading options and I'm going long. Going long means I'm hoping, basically hoping that the price will go up. I would hope, not hope, but through my strategies, I would like for the price to go up, for this particular stock to go up. So I'll hope to break through this key area, this 200 mark. But things don't always happen the way you want it to. If I went long for it and saw this, I would have to exit the trade because it's not the price is not going up, it's actually dropping. So there's reasons to have support and resistance line and talking about key areas because I know the key areas of 200 mark. Even then, sometimes I might not even go long or expect the price to go up. But those are just like the thoughts of a trader. But these things happen. But this is your resistance line. This is your support line. Resistance is the ceiling. If it touched that certain area a couple times, if the price is going up and it touches that area, come back down and touches that same area again and comes back down, that creates a resistance line. If the price is falling and it touches this area and goes back up and it touches this area again, that creates a support line or a floor. And I think I'll scroll back to where, yeah, the better example of support line is right here. This is your floor. See how it came down? It touched it and bounced off. Touched it again. Well, it didn't really touch it right here, but it kind of did. Touched it, bounced off. Touched it right here, bounced off. Sometimes it'll peek through the bottom or peek through the top. That doesn't matter. That's fine. As long as it doesn't come crashing through, then that line is no longer valid. So that's support and resistance. I'm trying to see if it was anything else I wanted to share with you all. Because I know I got over all time highs, bull, bear market, support and resistance lines. Even talked about the ticker symbol, which is something simple, but again, we forgot to go over it. But yeah, I actually think that's about it. So I hope y'all enjoyed this short little video. Again, sorry for not dropping or at least giving a notification yesterday. I'll try to get this episode dropped today, well, Friday. If not, it will definitely come within the next couple days. And again, no apologies. But I hope this little snippet will help y'all during your trading or investing, or even for the normal person that just want to get in to the stock market or crypto market. Hope this little bit of information helped you all. So again, like, comment, subscribe, run the numbers up. Make sure to put y'all comments in. Like I said, whether good or bad, we need the criticism. So run the likes up, put comments in, and I'll catch y'all next time. Peace.